Welcome to Tech Wealth Chronicles. Real stories, real people, real wealth. This is the podcast where we talk to senior professionals in the technology industry who have navigated the complex financial world in terms of building their own financial journey. From managing employee stock options to restricted stock units to building the portfolio, these are the set of people that we talk to who have managed, built, and preserved their wealth. Each month, we sit down with the leaders, the founders, the engineers, and the advisors to really understand how they have managed the complexity in building their own wealth. No hype, no jargon, just honest stories and practical insights so that you can take control of your financial future. Let's decode into the code behind building the wealth. So for today, our guest today is a name that commands immense respect in the boardroom and tax corridors and policy circles. A true powerhouse in global tech strategy, corporate law, and financial leadership. We are thrilled to welcome Amit Gupta, Senior Director at Tax at Dell Global in Singapore. With over 28 years of experience across India and Southeast Asia, Amit has been a key architect in shaping global finance. At Dell, he has led tax operations across 6 countries, handled high-stake audits, secured international tax incentives, and driven strategic repatriation. And before that, Amit was also at GE Capital and Intel. He led tax for multiple legal entities, structured complex cross-border deals, and even helped expand Intel's presence across South Asia. And I think the most interesting part that I'm clearly fond of is he worked right with the Prime Minister's office in influencing policy at the highest levels. He has worked with top consulting firms, something that both of us have something in common with, like Arthur Andersen and Ernst & Young, advising marquee clients on mergers and acquisition and tech strategy. And with credentials as a chartered accountant, law graduate, company secretary, and cost accountant, and I can go on and on, Amit brings a rare 360-degree perspective to global business. He just doesn't navigate the system, he helps design it. Please welcome a titan of tax and one of the sharpest minds in global finance, Amit Gupta.
Thank you, Malay, for inviting me. Thank you.
Amit, did I leave out anything that you would want to add? I mean, I'm sure this is an exemplary experience that you have got.
No, as you rightly said, we can go on and on. No, but I think thank you for the introduction and happy to be here.
Amit, and this is something that I've been personally looking forward to for such a long time. I know we wanted to do this 2 weeks back, but we couldn't because of some of the situation that ended up. But really, really thankful for you to come down. I know you spend your time between Bangalore and Singapore, so it's always great to catch you while you're in Bangalore. So once again, welcome to Crisp Idea.
Thank you for it.
So thanks, Amit, once again for joining us today. I know we wanted to do this for a very long time. So let's kick things off, and I want to start off, by zooming out a little bit and asking about your early memories of managing wealth, finances, etc. And if you can maybe start off with your early influences, your earliest memory about money and managing money or wealth, right? Was it about spending? Was it about saving? Was it about investment? Maybe if you can just talk back, from your roots perspective.
Yeah. So to be very frank, we are from a humble background, correct? So our initial thing was always to be save money. Look at what you're spending upon, saving it. And then the natural instincts were always about earning it, then getting into the earning phase of it. Because once you start earning is when you will then start thinking about saving and spending and all of it. So, for example, when I started my first job, the first thing my father told me is open a PPF account. The Public Provident Fund account. Though already we had the EPF, the Employee Provident Fund and all of it. So that was my early memories of starting to invest from what I started to earn. Then there would be things like investing in the NSC, the National Savings Certificates and all of it. So those were the early things. Putting maybe some money in fixed deposits and all of it.
Right.
But as you evolve, is when you start thinking about, is there a better opportunity to invest in something which can give more returns and all of it. So it's a journey.
Right.
It all starts with going slow. I think at least at that point in time. I think today the exposure is also a lot there, a lot
Right.
of it, correct? We read so much about what's happening in the financial markets and all of it. And then we have so many uh, advisors,
Right.
correct? Wealth advisors you have who can come and help you and get you the advice and all of it. So I think it's a journey that's gone through time.
Yep. Yep. No, but as you rightly pointed out, we all had a, at least our parents had a, mindset about saving and then came into
Correct.
investments. And now, of
Correct.
course, India is becoming more
Correct.
economy focused
Correct.
on spending as well.
Correct.
So that's how the evolution has happened. So I think
Correct.
naturally so for you as well. But you are a chartered accountant, Amit, and of course, it's a very hard profession. You learn a ton about the finance skills, etc. But going through your CA degree, right? Did it change any of your approach, about money beliefs altogether? And then did it change, the way you kind of think about money and saving and profits and finance and investments and so on and so forth?
No, definitely the education bit and all definitely help. Now, as I said, we can always think about it from two aspects, correct? One is earning and then savings and spending. As a chartered accountant, you look at the tax aspects also, correct? Think about where you want to invest and not. So, for example, there was something like the sovereign gold bonds which came.
Right.
Now, it comes with a tax exemption. So, being a chartered accountant or a tax professional, you always want to look at those kind of opportunities,
Right.
correct? Where you can get an exemption
Of
because
course.
that you like.
Right.
So I think obviously the education obviously helps us in
Right.
thinking and shaping about how we look at investments and all of it. I like law a lot, so I look at the regulations now. Now that I'm in Singapore, I look at the NRI, the foreign exchange regulations
Of course.
also, how much you can transfer from NRO to NRE and all of it, and from where you should invest and all of. So I think it's a mix of all these things.
Right.
It evolves over a period of time, and then you obviously look at the returns, and if you can look at opportunities of saving tax.
No, so Amit, I think this is, you did talk about the saving mindset and then the spending and then the investment. But one of the things that we have seen is a lot of family members sometimes influences your decision. I'm just keen to understand, do you take advice from financial advisors, or are there family members who have shaped your money beliefs, right? Whether about saving or spending. Just curious to know.
Yeah, so my advisor has always been my father to a great extent. After I got married, my wife has been also one of the biggest and the closest advisors because, so for example, my father, he comes from the belief that we have to be very careful about where we invest. Don't invest in risky instruments, risky. Don't have a risk-prone behavior towards investment. That's always been his belief, and I don't blame him for that. I think given from where he started and all of it, that's how it has been. But on the contrary, I remember my father investing in securities when he used to invest, and then it used to be IPOs and all of it, and he used to make good returns of it. But over a period of time, when I started into the phase of investments and all of it, he would always sort of guide me to be being less to be risk averse,
Right.
and invest in instruments like, as I said,
SGBs.
sovereign gold bond, which luckily has really given a good return.
Oh, amazing returns.
Because I remember having that conversation with him that why invest in SGB? It's not going to be. Who invests in gold as a bond and all of it? Yes, physical gold could be different, but who invests in 2.5% return? Not enough. But now look at it, it turned out to be well. So he has been the investor to a great extent. Then my wife, she started advising me because she had invested in some of the mutual funds which gave good results. So I invested in some of them. For example, the Contra Fund, then the
Which
Magnum Fund
okay.
have been giving good. The SBI Contra Fund
Okay.
and the SBI Magnum Fund and all has been giving good returns. So I have taken those advices. So what it proves and tells is that I do take advice. I'm not like looking at things to be, oh, I've done my research and I'm the, no, I believe the practical advice
Sure.
helps. So that's how we look at it. And over a period of time, the entire definition of wealth evolves, correct, as to how we put it. So the other thing that we look at is there's a saying in Hindi, correct, in terms of wealth accumulation and all, if we talk about, correct, पूत का सपूत को धन संचय and पूत कपूत को धन संचय.
Oh,
I
that's
think
a Kabir's quote.
Kabir's quote, I think so, but I heard it from my wife. I think, but it's more about you have to look at wealth in terms of what you can use it for, correct, and it's not about always saving it for the next generation.
Right.
You need to do what you want to do with it also, correct. So I think it's a bit about a mixed bag of all these things.
Oh, fabulous, fabulous. By the way, lovely quote. But are there mentors in your life? I mean, you did, of course, talk about your father, some influences coming in from family members. But are there mentors in your life, who had a lasting impact on your entire approach towards wealth management?
So no specific mentor, I'll be frank. No, unfortunately, maybe, but there has been no. It's been mainly my father and to a great extent my wife now. And I also speak now. I have started speaking to advisors and all. As I said, it's been a journey for me.
Right.
May not be the perfect one, but that's how it's been.
Right.
I now do speak to advisors. I do take advice in terms of where to invest. For example, now there is a lot of focus on alternative investment funds. Yeah, yes, I'm hearing a lot. People are coming and talking about it, saying you should invest. It seems to be a risky thing, but the returns can be
and illiquid potentially.
Can be
as well.
illiquid. Yes, I think there are lock-ins of 4 to 5 years or whatever it is. So I think, but the returns I'm told can be really good. It comes with the risk, obviously. I'm not advising people on it. I'm just sharing my my thoughts around it. So I think it evolves over a period of time as to where do you get.
Sure.
No specific mentor, but I do take advice. I'm always open to hear.
Yep.
I am very keen to learn. Now I am in more of a risk-taking space.
Right.
I think I'm at that stage of my life and career where I'm more open to taking risks.
Yep.
As compared to 10 or 15 years ago.
Yeah. So, Amit, when you look back, was there a career decision that significantly impacted your, personal finance or personal financial freedom, either positively or negatively, if you were to kind of look back?
Yeah. So, career decision impacting positively was about 2.5 years ago when I took the decision of moving to Singapore. It could have had a negative impact to some extent in terms of the earnings potential and all I could have had. So I think it's a good decision I took. Though personally it was tough, moving away from my parents and all of it was tough. But I think it is satisfying, at least from a career and financial perspective. So yeah, it's good. Anything that's been had impacted negatively, I don't think so. The only thing that I believe, which I would suggest or recommend to the new generation or the youngsters, is start investing early. That's something which I believe one should look at.
Right.
Don't wait. It's like we always say, if you have to do something important or good, I'll do it tomorrow. I don't think that's a good option.
And more so for investing, right? I mean,
More
the power
so
of compounding is
power
where
of compounding
it
is
comes in.
amazing.
Yeah.
And don't wait. Start investing regularly and do invest
And early enough.
as early as possible.
Right.
Take some risk. I think it's okay.
Yep.
When I say risk, I don't mean what I'm trying to say is don't focus on fixed deposits only, because I think that is something, if I could change, I would have changed that. Keeping a lot of my investments into these fixed returns,
Right.
fixed deposits and all.
Yep.
If I could change, go back and change anything, I would do
That would be the one.
Yeah.
Great. So, Amit, you talked about all the asset classes, across safe investments, gold, equity, PMS, real estate, and you also talked about, some of the people who influenced the decisions into different asset classes as well. But I want to double click a little bit on that, right? Like who in the family member influences your spending, within your family? And I think especially the reason why I want to also ask is, let's say if we were to look at your spending in last 30 days, what would surprise us the most, right? If we were to kind of look at that.
I don't know what would surprise you the most, but what surprised me the most of me spending in the last 30 days is me finally buying a car.
Okay, congratulations.
Which my son wanted. So it's,
there goes the influence.
It was so he's the, right now, if I have to talk about people influencing me in spending, number one is my son.
And how old is he?
He will be 13 in September.
Okay.
Number two is my wife. Now there's always a competition who's number one and two. At times they can switch. It's like, the ratings or the rankings, they keep on changing. So they can change from 1 and 2 or 2 and 1. So they are the top two influencers. Right. Then come my parents who are like, don't spend.
Okay.
Like even my father, he told me, you've spent a lot on the car. So but jokes apart, my decision to finally switch from my car, which my friends normally call it a Ram Pyari. So I switched from a Ram Pyari to a futuristic car.
Got it. Which one is it?
It is a Mahindra XEV 9E.
Oh, nice.
So it's an electric vehicle, futuristic.
Right.
What my son liked the most about the vehicle was the 3 screens.
Nice.
So the front passenger sitting next to the driver gets his or her own screen to watch movies and all of it. So that was the entire reason why we got into it. But that's been my spending.
Surprise! You finally bought an appreciating asset.
I finally am surprised with myself. And as I said, thanks to my son and my wife.
Yeah. So. But a beautiful vehicle and a beautiful car. So congratulations on that. Yeah. And I think for automobile manufacturers, like putting kids in their advertisement is the right strategy. So kids are the ones who influence the decision the most.
So I can tell you again, if you want me to continue, we went from buying, I can tell you, we looked at right from BMW to Toyota to we went to Mahindra to Volkswagen. We looked at everything.
You looked at BYD?
BYD. So we moved even to, when we went to the Mahindra showroom, we had gone to look at XUV 700. And then my son said, Papa, come and look at this one.
Let's look at the next
gen.
And
we clearly switched immediately from, so you can imagine how the new generation is influencing our decisions and spending. So I think a lot goes to them.
And I want to build on to that a little bit because, one of the things, as you know, we are a AI first wealth advisor as well. And you mentioned that a lot of people influenced your wealth management decisions, your parents, your wife. But I'm keen to get your thought process there that, let's say when your 13-year-old child grows, right? And would he look at, getting advice from a financial advisor, or would he be more comfortable with AI and technology? I mean, I just want to get your thought process in terms of how AI is changing the whole financial world and financial advisory world as well. Also, given the fact that you are playing a role in the
Yeah.
technology company as well.
No, so I work with Dell.
Exactly.
And we are selling AI. So I have to
Right.
give that disclaimer.
Right.
We are selling AI like anything. We are making our money by selling AI. So I am a big supporter of AI. Now, but can AI replace humans? I don't think so. I don't think it can completely replace humans. If I have to advise my son, the one big advice I will give him is start investing early.
I think that
Now,
goes out to all our listeners as well.
yeah, he should definitely start investing early. Now, whether only rely upon AI and the humans, I think the human experience counts. So in the examples I had given you earlier, like my wife, why she could advise me is because she had invested herself in those in her early days when she
Right.
was working and all, and she had made got good returns on it, made good money out of it. So that's how she could advise. Now AI can obviously do that, obviously, but the human interface is where you get the comfort, because AI by itself will be just pulling out data,
Right.
and it can tell you the data, but then you really have to go with the thoughts, the experience, the
Judgment.
human, the judgment, because there are many things which goes into it. I frankly I believe my recommendation to my son would be look at AI. Definitely use
Right.
AI. We should use AI.
Right.
If we don't, we will be left behind.
Right.
So we should use AI, but then complement it
Yep.
and blend it with some good advice.
Yep.
Somebody who has experienced it,
Yep.
because experience, nothing can replace experience,
Right.
in my view.
Right.
Yeah.
No, I think that's a great answer, and something that we look forward to in terms of really blending the whole AI capabilities with the human financial wealth advisors as well in our firm. So I think that's something which we could relate to a lot. So Amit, you did talk about both gold and equity, right? And I think this is a $1 million question when it comes to wealth management, which is how do you look at all the different asset classes? Which asset class, do you invest in, or how do you diversify across all the different asset classes? If you can just talk about, and I know some of these influences that the family also has influenced in terms of what kind of asset classes you invest, but how has your asset class allocation has also changed over time or over experience as well? Maybe if you can just elaborate on that particular point.
No, over a period of time, it's changed. You rightly, I think, mentioned it that it evolved. Initially, if I mentioned that invested in something like PPF, then EPF used to be the thing, then FDs.
Right.
Over a period of time, evolved into getting into, as I said, gold, little bit of the sovereign gold bonds, then invested in mutual funds, starting into looking at the different sections of it, then property,
Right.
something that you buy for yourself. I am not a person who normally invests like you. I've seen many friends investing in properties and then putting it on rent.
Right.
I have not. I am not in that school of thought.
And why is that? Maybe if you can just...
Why, in my view, is because property appreciation, number one, can take a long
Lot of
time.
time, yep.
Lot of time. Second, you have to keep on renting it out,
Right.
looking for a tenant, all those hassles of
Managing.
registration of agreements and going through
Right.
it. Is the rent coming on time?
Right. Paying property taxes.
Is not my cup of tea.
Right.
So I have stayed away from property. The only property I have is where I live.
You live. Yeah.
So I am happy with that. It's not a property person. It's been mainly the financial sector is primarily either I sort of diversify. I put something in liquid cash, which is mainly fixed deposits. I do keep some bit of money there. Then I do invest in, as I said, I have invested in sovereign gold bonds. I have invested some bit in government bonds. Because,
like RBI bonds? Or?
Yeah, because to some extent now, if you remember, they initially had the 7-year one, if you remember, where you got the entire amount on maturity. But then there is something that where you could invest and they give you 6 monthly interest.
Got it.
It's more for the cash flow.
Right.
I do keep it because what I like is the cash coming in. Because now that I'm Singapore based,
Right.
I do need cash in India.
Right.
Because the option is for me to either transfer money from Singapore to India,
Sure.
or I have something where I can keep on drawdown
Sure.
and all of it. So that is something. Then looking at mutual funds, I've also done PMS. So overall, I have looked at, am I someone who invests directly into stock? No, I don't normally
Sure.
do that. I don't know why, but maybe I want to leave it to the experts,
Fund managers and
the mutual funds and all of it
Right.
to do it. I am not somebody who is. I've also invested a little bit on ULIPs.
Okay.
The unit linked, where they give you the
Right.
the life cover with the. So I've
Right.
done a bit on that also. So I've sort of tried to diversify.
Got it.
My next aim is, what I'm hearing is a lot on AIFs, alternate
Right.
investment funds.
Right.
Even in Singapore, there are people who come and talk to you, invest in these high risk, but I have heard high returns.
And some illiquid also.
Some
maybe.
illiquid also. You have to be there for about 5 years or
Right.
something like that. So that's the next thing I'm thinking about,
Got it.
whether I get into AIFs or not.
Got it.
So it's a mixed bag.
Understood.
I have tried to diversify as much as I can.
Yep. And if I may just ask one follow-on question, if you have to put percentages to this asset allocation, let's say for someone who is at 50, what that ideally should be, and where you are at, where you are looking at making certain changes.
So I may not be the perfect example, but I can talk about myself. I don't really go by percentages. I am more of a gut feel person.
Sure.
I do have everything on my Excel sheet, but I would normally go with the gut feel as to where I should keep it and how I go about it. So, but I can give a general idea of where, if I have to put my investments into the high risk category, then it would be
high risk being equities or PMS. Or?
Yeah, normally when you are investing, your advisors ask you to put where would you want to be. So I have put those in the high risk.
Sure.
So that's how I understand it. I've sort of put it in the high risk, means high risk, high return.
Right.
Kind of thing. They are like the aggressive, I think.
Yeah.
So I have categorized myself as an aggressive investor. So accordingly, they will invest.
Right.
So that I think is about 15 to 20%.
Got it.
I'm a very safe investor. Then I would have, lot of these the safe investments are a bit bulk of my, I would say about 50%.
Got it.
May not be the, I know if I speak to any wealth advisor, they will be like 50 is not a good number, but that's how I am.
Right.
Rest all is mainly some bit of liquid cash, then other things, real estate and all of it. So
got it.
I'm slowly moving towards it. I can tell you about 10 years ago, I would have had like maybe 0% in high risk.
Got it.
I have slowly moved it. So I am getting there.
Understood.
May not be the best example, but that's how I am.
No, which is absolutely fair.
Yeah.
So Amit, we did talk about all the positive influences the family members, for example, had on your spending and investment decision. But let's talk about the financial mistake. Has there been one financial mistake that you made that you kind of regret, or has there been any financial decision that you potentially regretted at the point in time when you made that decision, but turned out to be a good one?
Yeah. So the example I was giving you, correct, wherein we had thought of investing in the sovereign gold bonds.
Right.
That's a big example for me.
That turned out to be great.
I was like, I was in the school of, why should we put it in this? Because gold, who imagined it will go three times and
Right.
all that from where it was. So
Right.
at that point in time, the debate I had with my father was, is
Hmm.
it really something? Because 2.5%
Is
per
nothing.
annum
Yeah.
is nothing. It's
Right.
like it's
Right.
actually I thought it's like I'm doing injustice
Hmm.
to, but then he somehow convinced me and said, okay, let's put some part of it or
Right.
whatever. But frankly, when I look back,
Right.
given the tax exemption and all of it,
Right.
it's an amazing.
It did better than equity
It
as
did
well. Yeah.
better than equity in terms of a bad a decision which I had taken and which turned out to be bad. In that, there was nothing in terms of investment because investments generally have been okay. But I think the one thing that I think I should have done earlier
Mhm.
is not putting too much in fixed deposits.
Right.
I think in the early part of my career, I was playing a lot of it to be safe,
Safe.
keeping it in. I think that's something which I didn't do right because I was paying tax on the interest,
Yep.
and post tax the returns were not enough.
And
So
post inflation.
yeah, so for the
Yep.
audience, my suggestion would be start investing early
Yep.
and don't put too much in fixed deposits.
Fixed deposits.
Put
Yep.
put maybe little bit. You
Right.
should obviously have 10-15% or whatever is your need
Right.
into that, but don't put too much.
Yep.
I think that's one mistake.
Right.
And I admit it to be a mistake.
Got it.
I should not have done.
And was there a year or time when you actually kind of pivoted to saying, okay, let me get more aggressive on equity? Was it like
Yeah.
around the COVID time, or maybe it was pre-COVID?
No, it started pre-COVID to some extent.
Right.
But now, of late, I've become more aggressive.
Right.
As I was mentioning, the category where I put myself now when I'm talking to wealth advisors, because normally they'll want to know
Yes.
what kind of investor are you,
Yeah.
a risk taker. So I put myself as aggressive.
Right.
I want to go all in because I think you should in your portfolio put like 25, 30 or more. I think to each person, the
Depending on
number,
risk profile. And
will be different.
age,
But
yeah.
I want it to be 25. I'm slowly increasing it over a period of time into more aggressive and the high growth or the high return sectors.
Right.
Because normally you put sectors also, correct, where you can expect high growth.
Correct.
For example, people are talking about renewable energy sectors.
Some of the new emerging sectors.
So it all depends
Right.
which one can take off or not take off, correct?
Right.
So I'm okay with that in putting, and time will tell,
Of course.
which way it goes.
Of course. Yep. I want to ask one additional question on the spending part, which we touched upon. So, are there certain expenditures that, let's say, normally people would call it wasteful, but like for you, it's non-negotiable, right? I mean, this is something that it doesn't matter how much it costs, but you got to spend. I mean, are there any such categories of spend that you have in that bucket?
So I would sort of put it in two buckets. One could be at a personal level,
Right.
and one could be at any other level in terms of spend. I believe when you say spend, we are not talking about savings, correct?
We are talking about whatever you are spending on, maybe healthcare, travel,
healthcare,
whatever.
So that's what I wanted to pick up on. So, for example, my father is 75. And he's in a situation where I don't think anybody would cover him from an insurance perspective. So we have to spend a lot on healthcare. I think the first question people ask you is, are you insured? But after a certain age, I think I believe it's impossible. I'm not maybe to get yourself insured. So I think that's something that you cannot avoid. I think
family first.
Family first, non-negotiable. You will have to spend on healthcare. I think the one other advice I would have for people is try to get an insurance for yourself. I think one should do that.
Right.
I think people should focus on that.
Right.
I'm not talking about life insurance. Life insurance also one should, but more on the health.
Right.
Because what happens is a lot of times when we are in jobs, we take it for a given that, okay,
It's
the company will cover and all. But I think if at a certain point you pivot to maybe doing something on your own and all, that's when it can be costing. And the later you start getting the insurance, the premiums would be
More
even more higher.
Right.
So earlier you start, the premiums can be lesser. But again, I think it depends upon each one its own.
Yep.
The other way I also look at it, so there are two ways to look at it. The other thing, the debate I have internally with a lot of people who are in this school, which I just mentioned, is I can have my own insurance also, correct? Think about it. I punk some funds
Certain
for
amount of
health
money, yeah.
and put it into a fund or give it to a wealth advisor or whatever, and they will give you the return. Because what does the insurance company do actually?
They are aggregators at the end of the
They
day.
take your money, they put it into something, and the return is what they're giving you back,
Right.
correct? So I think it's all about how one looks at it.
Yep.
But I think one should have
Coverage.
a category of fund for healthcare, then a category for education. Because for your kids, education, depending upon you want to send them abroad or wherever, not everyone will get scholarships, correct? So,
Of course.
So you will have to put some money there.
Yep.
Then as I said, emergency fund or whatever. I think one has to categorize all your.
Correct. And create those buckets and then allocate investments
But
towards
are
those.
we disciplined enough? Maybe not. Over a period of time, we start pulling from this category to that category, depending upon.
Right.
So I think
And that's where wealth advisors,
wealth
come into
advisors
picture,
can help you, because they get you into that discipline, I believe.
Right.
Where they ask you the right questions. I think the thing is, many a times we get so caught up into managing things, or your day-to-day life and all that stuff, that you don't spend enough time on those questions.
Yep. No, that's a great answer. It's a great answer. One question, Amit, I definitely want to ask you, and especially, a lot of our listeners and a lot of our clients are also non-resident Indians. You, of course, are spending time between Singapore and India. And I think one common complaint that most, foreign investors or even for NRIs is that it's a huge legal hassle in terms of operating between two jurisdictions, right? Two tax jurisdiction. And there are, of course, government is bringing in more SOAPs and incentives as well to invest into India. But then, of course, you have to manage your NRE account, your NRO account, and you have to do your double tax avoidance. And I mean, it can really get into, very complex world very quickly. But you are, of course, a tax professional and you have experienced this as an NRI.
Yeah.
Maybe can you give some tips or suggestion in terms of what should an NRI investor who is also investing in India, who is also potentially spending and earning and investing in their local jurisdiction, which could be outside India, how what are the top level kind of recommendations you have for them to, do it efficiently? I know it's a subject on its own and we can have a separate topic on it.
Can be,
but maybe your top 2-3 kind of pieces of advice that comes to your mind.
Yeah. So generally speaking, if I have to look at it solely from a tax perspective, I think one has to look at what I generally call, what is your source of funds for the investment and where are you getting the return? I think those two things have to be clear. So why I'm saying this, for example, when I'm investing, if I invest from an NRE account, which is the non-resident external, if I'm not wrong, which means I can easily take that money out. I think that the categorization is different compared to the NRO account, because that's the ordinary account. It's like you are investing from here itself. So I think that's one thing one has to be careful about, as to which of these.
So NRE is more easier and simpler? I mean, broadly.
More easier, simpler. Like, for example, I'll give you one example. If I am investing in ULIP, unit linked insurance plan, I'm just giving few examples. If I invest using an NRE account into a ULIP, I will not be liable to pay GST. See, when we talk about tax, people only focus on income tax, but there is a GST element also.
Yes.
For example, if you're taking insurance, because insurance also can be an investment, as
Of
we were
course.
just talking about. So ULIP is one. So GST is exempt. So
Hmm.
what they will do is they will charge you first,
Hmm.
but then they will refund it back to your NRE
Okay.
account.
Got it.
So that's a simple savings.
Hmm. Hmm.
Very sounds complicated, but it's not that
Sure.
complicated. It's quite.
Sure.
So which account you use? So
Sure.
if I pay through NRO the premium,
Hmm.
I will not get it back.
You will not get the refund.
So that's one example. NRE, again, if I invest in for example, mutual funds or shares and all
Hmm.
of it, there are recent judgments also that came.
Hmm.
I think people, if you look at social media, there were a
Hmm.
lot of things on recent judgments of if a non-resident is investing into a mutual fund, non-resident investing into shares, depending upon which country you are investing from, basically where are you a resident
Sure.
of, correct?
Sure.
You can be a tax resident of India
Hmm.
or the other country, so one has to be clear about
Sure.
that. Am I clearly a tax resident of a foreign country? If you are a tax resident of a foreign country, then you investing from there, you can take the benefit of the double tax avoidance agreements. I know it can be complicated, but you can take
Right.
shelter through that
Right.
in terms of reducing or eliminating to a great extent your tax.
Tax liability.
Can it be fully eliminated? Maybe not.
Not. Okay.
But yes, you can plan it better.
Hmm.
Again, for example, I'll give you another example. People are setting up family offices and all that stuff, the gift city, the family. People create a foundation in Dubai. So what's a foundation? I also learned it that it's a kind of a establishment that you have there. You register it as a foundation, you become a contributor or whatever as a to the foundation. Your money gets invested through the foundation, you get the tax residency, and it's all exempt in Dubai.
Yeah.
So you could have paid tax in India, but you may get a refund of that foreign as a foreign tax credit, which can be claimed as a refund in the resident country, which could be the United Arab Emirates. I say Dubai. Dubai is the is
UAE,
one of the country, one of the cities,
Right.
but it's part of the seven Emirates, correct?
Right.
That's how the United Arab Emirates come. It could be Qatar or it could be any other country
Got it.
that you can, and depending upon the laws of that country and the double tax avoidance agreements, you could get refunds. So it all depends upon how you plan and structure it.
Yep. Well, I think this is a great advice because tax planning is an important part of wealth management, and especially someone who has been a long-term investor who is kind of creating a very large amount of potential long-term capital gains liability. One should really look at this very closely and see if they need to look at a different structure to optimize the tax. So brilliant answer, Amit, over there. I have one question, and I'm just kind of going back, to some of the lessons learned, etc. If you were to kind of mentor your own 30-year self, right? Maybe looking back 20 years back, what's one piece of advice, you would want to give it to your 30-year-old at this point in time?
Yeah, I think I'd mentioned it earlier, but I'll say it again. Start investing early. And when I say investing early, I don't mean investing only in fixed deposits or the public provident funds and all of it. They don't give the returns which can be there. I'll give one example. If I have to really look back at 2015-16, the Sensex was around 20,000, 25. 15-16, for somewhere around that. Today, look at it. It crossed like it's almost four times of
Precisely.
where it was. So that's just one indicator of what kind of returns you can get if you start investing early. So the one thing I regret and the one advice I would have given to myself is start investing early and stay in the market. The other thing I think a lot of times we do is, I've got 1x or maybe I'm like close to 1.5 or whatever. let me
take it out.
withdraw. I think just doing it without advice is not a good thing. I think one should take advice. I am a big believer in talking to people, taking advice from wealth advisors or whoever you trust. Uh, Take advice,
Right.
because just being in a hurry, oh, I'm getting some gain, let me pull it out, may not be the best.
May not
Yeah,
be the best.
if you are looking at tax planning, then yes,
Of course.
take it out, book your gain,
Right.
plan your tax, and then maybe reinvest.
Right.
That could be a strategy.
Right.
But beyond that, I think until and unless you need the cash,
Right.
staying invested is
Right.
a good option.
Right. So I think two great pieces of advice from Amit there. I think one is start early, look at the power of compounding. Look at what Sensex has done over the last 10, 20 years. And I think the other piece is stay invested in the market, right? Unless you really need the cash or you really have an event where you need to look at that for tax optimization perspective, stay invested in the market. So I think really golden pieces of advice there. Um, I want to come to the last section of our podcast. I want to kind of get your forward-looking views, right? So, how do you view wealth in context of building the legacy? What do you want to leave behind beyond money, right? I mean, if you were to kind of look forward, what is it that you would look forward to?
So I think in the early part of the podcast, I had used the phrase, correct, in Hindi, "Poot kaput to kaay dhan sanche," or "Poot saput to ko dhan sanche." I think that's what I would want. Frankly, in my view, uh, the way we look at it is, and my wife has been a big influencer for me on it, is that don't leave it unnecessarily, the money, because there are only three, and that's what our Veds or whatever our ancestors, they've thought it. There are only three things that can happen to money. Either you will use it, which means consume it, or you donate it, or it will be destroyed. There is no other fourth thing that happens to money. I don't know whether it's true or not, but I somehow started believing in it, that use it to a great extent.
Right.
Am I strictly following it? Maybe not. I'm still not following it, but I agree with what's being said, that there are only three stages of money. So, in terms of legacy, I do want to leave for my son, but the only thing is, it should not hinder the growth of that individual, which is my son, and then the lineage and all of it. So I think it's all about looking at that. There's no end to what you can leave behind.
Right.
But we have seen many
Instances.
billionaires getting made from scratches, and many billionaires falling down right from where they could have been. So it's all about your personal belief, your strength. I think that one can what can make or break anybody. So I have very different
absolutely.
views about it.
In fact, one of our research, we looked at it, we found that 90% of the wealth created by millionaires and billionaires is destroyed by the third generation. By the time it gets to the third generation, that entire wealth has disappeared.
Correct. One more thing. India luckily does not have inheritance tax. Now, being a tax guy, I have to talk about it. Now think about it. Why people in the US, have you seen, if you go to any cruise or any holiday, what you would see is maximum people who are there on the most expensive cruises or the holidays are people from the West, US and Europe and all, old age people. They spend like crazy. And I have always thought why, and I think the answer lies in the fact, I think it's 40-50%, if I'm not wrong.
It's massive.
It's a huge inheritance tax in the US. It goes straight to the government. So they're like, what do I do? Why? What 50% goes to the government? What's left with my lineage or my successors is not much. So might as well spend and enjoy. So I think inheritance tax in India may come because there has been
You are giving now ideas to our finance minister.
no, but every budget there is discussion on it. If you
Right.
if you
Yep.
see
Yep.
every time as we come close to the budget,
And we had wealth tax at one point in time.
we
as
had
well.
wealth tax which was 1 or 2%. Inheritance tax could
Could
be
be even bigger.
could
Yeah.
be bigger. So we don't know.
Right.
But I'm just saying that that's another point which shows
Right.
that governments across the world
Right.
don't like the legacy bit, it seems.
Yep.
And
They
goes
want to-
back to the point I was saying, the 3 stages of wealth.
It's consumption.
Either you consume it or donate it or it will get
destroyed.
wasted.
Yeah.
I don't know. Maybe India is also moving towards it.
That
We don't
direction.
know what will happen. Yeah.
Good point. Good point. I want to ask one question on your, money belief that you think the society widely accepts, but you strongly reject. Right. So, are there any such norms? You did talk about, property, for example. I know real estate is a very favorite asset class for a lot of Indian investors. You said you don't like it, but are there any other such norms that you kind of strongly reject? Maybe what is a standard, maybe belief in the society from a wealth
Yeah.
management standpoint?
No, if you look at when I looked at my grandmother, my mother, they were strong believers in investing in gold. That they would want to be looking at investing in gold. No. Yes, it turned out to be good, but is that something I want to continuously invest in? Maybe not.
Okay.
Have some part of my
Allocation.
allocation to it, but maybe not. Society, again, as I said, from where we come from, it's always been like save, but be safe about it, keep it protected, don't invest in aggressive. I think that's changed a lot. As I
changing as
mentioned
well.
it earlier also. I think my view on things have changed. But as I said, those 3 things, am I strictly following? Maybe not. Am I consuming everything? No. Maybe I'm still saving. But that's a whole thing. How you so society tells you a lot of things that you should be doing this. Not. I think to a great extent you have to think about what's the right thing for yourself and where do you want to put it. So I think over a period of time things change and it all evolves. So there's no right or wrong really. It's all about what works best for you.
One final question from my side, Amit, is you are closer to 50 right now?
Yes, I am. I've crossed 50.
Yeah. So there is increasingly this concept of FIRE, which is becoming popular, which is, I want to be financially independent and retire early. A lot of people want to pursue their passion, their dream projects, etc. But once they've secured kind of their retirement, whatever they need for their healthcare and their next 30-40 years of their remaining life, and then people do talk about FIRE as a number. So do you believe in FIRE as a concept, and if you do so, is there kind of a ideal number that one should look at?
So I have looked at various calculations where they tell you calculate your monthly expenses multiplied by certain number
25 times.
If you have something like that, if you have that much in your bank, when I mean not liquid cash,
total net
worth, the balance sheet or whatever you have, the Excel sheet or whatever, if it crossed that number, you are well. Even if I have it, I would not want to retire. I already have my plan B actually. So as I told you earlier in the earlier part of the when we
podcast,
were talking, is that I like law. So the reason why I've done my law is that's my plan B. Even if I give up working, when I say working, I mean working as an employee at a corporate, I would do something of my own. I would start my law practice, which could be related to tax and all of it. So that's my plan B. But I would not retire. I would not.
Oh, that's lovely.
Yeah, because I do want to follow my passion and all. But for me, if I am not working, and to be very frank, if I'm not earning money, then I'm not doing enough. So I think it's a measure
Right.
to a great extent of your self-worth.
Right.
See, you may have a lot or whatever in your bank account or as I said it, but still, that continuous flow, if it is not there,
Right.
you
That
sort of,
drives
I am in that
dissatisfaction.
school.
Yep.
I sort of, you don't get the kick. I don't know.
So not retiring for the next 30 years, huh, Amit?
At least, I
No,
don't
no,
think.
that's a great one. And in
Yeah.
fact, the reason why, I mean, I'm just sharing my personal story. The reason why I chose wealth advisory as a career and giving up consulting is because you can do wealth advisory even when you are at 80, right? And you will have seen more cycles of
Correct.
the economic upturns and downturns
Correct.
by then. So maybe your advice gets
Correct.
better as you age as well. But
Correct.
I mean, I completely relate to what you are
Correct.
saying. So we are now coming to a final section, Amit, which probably you will also enjoy. It's a rapid fire segment. We are going to shoot some questions, and my suggestion is don't think too much. Throw whatever comes top of your mind, and we'll try to do it as quickly as possible.
Yes, yes,
right?
yes.
And the answers can be even one
Can be
letter,
weird
one
also.
word answer can be weird, can be an example as well, right?
Yeah.
So let me shoot right away, Amit. First big purchase that you were truly proud of.
My house, my residence. Yeah.
Residence, yeah.
Yeah.
That's always big. It's typically the biggest financial
Yeah.
decision, right? So, spender or saver, what comes more naturally to you?
I am a born saver. Now I'm moving towards spender. I already, as I mentioned, so
Yeah,
it's a mix.
fantastic.
Inherently a saver.
Inherently a saver. Yeah.
Yeah.
Debt necessarily evil or a total trap?
Debt is a total trap. What I've been taught by my father and which I follow is zero debt.
Zero debt.
Zero debt.
You don't believe in leverage either? And
No, I don't.
I'm
do
guessing
it.
the car that you
Zero
purchased
debt.
is all cashed out.
All cash.
Okay,
All
awesome.
cash.
I love it. If not finance or law, what career would have been for you?
I would have been a dancer. Believe me, I know in the shape I am, doesn't look like, but yes, that would have been my career choice.
I would have loved to see that.
If I had the financial freedom at that point in time, I
Would have
didn't
pursued
have the
dancing.
necessity to earn money, which is I would have been a dancer.
Nice. Love it. If your investment style had a theme song, and that song could even be a Bollywood song, what would that be?
क्यों पैसा पैसा करती है?
I'm hoping your wife is not listening to this.
No, but it's not about my wife. Actually, it's for me. Though it sounds feminist,
Right.
saying "क्यों करती है," but
Right.
I am actually the one who's the character there.
Got it.
क्यों पैसा पैसा? Because when you asked me that question, would I want to retire early? No.
Right.
As I said, money does give the kick. So maybe
Nice.
I'm the one chasing it. So I don't know.
Nice. One city you would retire in?
Bangalore.
Wow. That surprised me as an answer,
No.
especially someone who lived in Singapore and everyone complain of the traffic
Singapore
and garbage.
is too hot. The Bangalore weather is amazing.
Okay.
Correct.
Goes back to
Even though
weather.
the traffic can be bad here, but it has got its many positives. Correct. So yeah.
Got it. Go to vacation spot?
Go to vacation spot, not a single one. Actually, we keep on going to many places. So we keep on trying to go to all the next one we are thinking of going is to Batam in Indonesia. We are going there.
It's an island or?
It's an island. Then Bali is the next one.
Nice.
Then within India, we are thinking of going to Kabini again. So yeah, these
nice,
are the ones.
nice.
Yeah.
And then bull or bear as a personality?
So as I said, inherently, so I wouldn't call myself a bear. My thing is, if I am a bear, then I am totally bear, or I will be a bull. So I'm now towards being a bull rather than being a bear.
Okay. So one last question that we typically end with is, over the next few coming days and weeks, what are you most looking forward to? And I'll also answer my part as well, but would love to hear yours.
Yeah, so I'm most looking forward to is my new car. It's getting delivered on Friday. So
nice.
I'm looking forward to that.
Nice. And maybe putting some mileage on it as well.
My son is looking forward to it, so I am also looking forward to it.
Fantastic.
But
Fantastic.
yeah, it's many things. But generally that's what I'm looking for.
Fabulous.
And what about you?
Yeah, my son is getting into the college, so he will be a freshman. He is getting admission into computer science engineering in
Wow.
Bangalore itself. So it's going to be, of course, an important phase for him. So I'm looking forward to his basically growing in, coming off into the adulthood and becoming a freshman this year.
All the best to him.
Thank you. Thank you.
All the best to him.
Thank you so much, Amit. As I said, this was something I was looking forward to for such a long time, and we could make it happen, although after 2 weeks. But all the best for your, vehicle delivery. Also, best for the summer months ahead, and for your travel to Kabini and other locations.
Thank you.
And we really loved you having on this particular show.
Thank you for inviting me. Thank you.
Thanks for watching,
Thank you.
we'll be, in touch for some of the future episodes as well. Thank you.